In this video, I will talk about my investments in China, whether I will buy more in the future or I will totally sell out of China. Welcome to this YouTube channel. My name is Christophe Nour. I've been investing in the stock market for almost a decade and I have achieved a performance of 25% per year. And my performance is public, my portfolio is public. I'm sharing with you my portfolio on eToro. This is a completely public portfolio and you see that Alibaba is my only Chinese holding with an allocation of 2%, 3% of the portfolio. It was not always the case. Before, a few months ago, a few quarters ago, I had a much bigger allocation to Alibaba and I had a much bigger allocation to Prosus. Okay, so Prosus is an investment into Tencent. That's a holding company linked with Naspers. They invest in Tencent. By the way, if you plan to invest in Tencent, you can check out Prosus and Naspers. So I had Tencent and Alibaba. I sold my Tencent at a profit and I only have Alibaba at the moment. Now what is happening with China as of December 2024, you have a big stimulus coming to boost the economy. And it's a $1.4 trillion stimulus. You have different numbers between different media, but you have some big stimulus coming from China. And China has been very careful using the stimulus because they don't want to generate inflation. They saw how inflation could destroy civilizations, but maybe that's for another debate. China has been a country for 4,000 years, so their main goal is to survive and be very, very long term. So they don't want to shoot for the stars and then crash because of inflation. So they are very cautious when it comes to inflation and they have been very slow implementing stimulus. But now the economy doesn't come back from COVID lows from 2020, from zero case lockdown, I mean extreme lockdown in China. So they went on and came with the bazooka stimulus. Okay, very well. What will change? More consumptions, more stock buying, more wealth generated, created, and now the inflation is at 0%. They even have deflation, so they can allow a little bit of inflation based on free money. Okay, very well. And now you have incentives for banks to buy stocks, not short stocks, only buy and hold. We will see if it happens. Actually, nobody knows if this will happen. But you can see what super investors are doing. You have David Tepper coming on CNBC and saying everybody buy China, everything, bonds, stocks, ETFs, everything. Big investor. If I look at his portfolio, David Tepper owns Alibaba, PDD, JD. I have a doubt. Let me check. No. This is not this one. I'm doing this live with you. If you check who owns this one, David Tepper here. If you look at this big investor, 15% of his portfolio is into Alibaba, 11% of his portfolio is into Pinduoduo, and you have JD, which is 4% of his portfolio. So that's 25, 30% of his portfolio. You have Beidou, the equivalent of Google for China, a light version of Google, and you have the an ETF for Chinese large cap. That's approximately 5%, and this. So you can say above 35%, more than 35% of his portfolio is into China. Same thing with Howard Marks. You don't have such a high allocation, but Howard Marks is getting more and more interested in Chinese holdings. So something is happening, and these big investors know more than you and me. You and I. So there is maybe something happening, and let me go back to this Alibaba position. I've been holding Alibaba since 2018. I know the company really well. I know the new management really well. I know what happened to the past management. I know their plans. I remember when they said they would do a complete restructuring of the business and they will split all their segments because it will create value for shareholders. It didn't create any value for shareholders. So now they plan to gather up, like to do big bundle of these segments, different IPOs. They failed to raise money to do IPOs for business segments, it's a complete fail. And management knows that it's a complete fail. So Alibaba is struggling. But still, they are very cheap. Still, they do some buybacks. Still, there is a healthy balance sheet with a lot of cash. So if you take into account the enterprise value of the company, we are talking about one of the cheapest investments you could have. But this is a struggling company, so it deserves a discount. Okay, very well. I completely failed on Alibaba and I lost money. I invested in Alibaba when it was like $200, $250. Now it's at $80, $90. So since 2018, that's what, 6 years, lost almost all my money. So complete fail, and this is why I also do this YouTube channel and why I make these videos. It's to have a reality check. By the way, if you're looking for a complete framework to analyze stocks and build a strong portfolio, I have a coaching program. More on that at the end of the video. If you look at the Chinese earnings over the past 20 years compared to the US earnings, like earnings per share for the US over the past 20 years, you see that China has gone nowhere because capitalism is too harsh. Maybe they have a lot of regulation. If you look at the big companies in China, they don't produce more earnings than in the past, on average. You have some exceptions, but this is nothing comparable to the US. So I completely understand why you have a big discount between US and China. If you look at the PE ratio for the US, for the S&P 500, now we are around 30. PE ratio of 30 for the US. And PE ratio of 10, 12, 15 for China. So you have half the valuation for even not half the growth. No growth whatsoever for China. So I understand the discount, and I don't think the discount will... I don't think the gap will be closed anytime soon because of the way China is. Big tech, big regulation, and I am expecting more struggles for Alibaba because of the cloud. They are struggling. They have a lot of competition right now. They have JD.com. You have PDD. You have a lot of incentives to. I mean, you have so many problems, so many struggles for China, and I know it from a 6-year shareholder. So I know it very well how it goes, and that has been a mess. Now you have this stimulus, super investors, so you may be seduced to buy more China. Maybe not Alibaba, but other things. You have great companies, you have PDD, you have Daco, New Energy, you have JD.com, Meituan. That's fine. But on the other side of the coin, you have the US. And if you look at all the data centers that are going to be built in the US is very likely to lead the next technological cycle with the AI, with their Google chip, with their ChatGPT. All the AI stuff is coming to the US. And now they have a new president with incentive to deregulation. You want to reduce regulation, you want to reduce taxes, you want to reduce all the bureaucracy to foster these big tech companies. So if I had to bet, I would say that the earnings for the US, driven by these tech companies, is very likely to go up over the next years because of this big AI tailwind. For the moment, maybe not in the future, but for the moment, in the next following years, I expect the earnings per share for the US to go up by a lot. I can't say the same thing for China. Unfortunately, the only positive thing I see right now for China is the stimulus. Okay, guys, it's a complete bailout. That's it. So, do I want to buy stocks based on a bailout? No, not necessarily. I want to buy stocks because they will produce more cash flow, more earnings, more revenue, strong management, strong vision, a strong moat. I don't want to make my portfolio based on a bailout. And I know that some super investors have some convincing argument to buy China. And you know what? I listen to all of them. And I know that they have been saying the same stuff about China, bullish, reversion to the mean in 2024, same thing in 2023, same thing in 2022, and even more. So every year, everybody expects China to come back to reality. And every year, it seems that they are struggling. I hope I'm wrong. I hope the Chinese economy booms, and then a lot of people are getting lifted out of poverty, and they are generating some generational wealth. A lot of billionaires in China. This is good for the world, good for everybody, good for the middle class in China. I hope I'm wrong, but as an investor, I have to invest the way the world is, not the way I want the world to be. So I am forced to reduce my exposure to China. And I plan over the coming quarters to completely sell out of China because of impatience, because of opportunity cost. Now that we have a beautiful landscape for tech in the US. Now I see a lot of opportunities in the US. Not because of valuation, but because of growth. So this is all about opportunity cost. And I'm telling you, I will not buy more China. And I will take advantage of a quick bump or a boom of 30% stock price, like a recent bull market, to sell my Alibaba position and do nothing with China for the moment until everything is resolved and the economy is back on track. But if history rhymes, we will have a struggling economy for China in 2025. Maybe you see some things on Twitter right now, on YouTube right now, saying that in 2025 China will be better because of this and this and this and this, and you have a lot of convincing argument. I have been there before, and I heard exactly the same things for 2024 and for 2023 and for 2022 and for 2021. Like, it will continue. It's great. This is the second largest economy, GDP per capita, etc. GDP is growing very well. Yep, I heard it. But for China, this is a very particular case because GDP is growing, GDP per capita is growing, but the EPS, the earnings per share for companies, are not growing. This is very strange. This is the definition of capitalism with Chinese characteristics. Everybody is getting richer, but not for the stock market, not regarding the stock market. Different from the US. So why use our US standards to use it for Chinese holdings? It's a different game. And you may say the same thing about Korea and Japan, but for Korea and Japan, you have a different mentality. That's a different game. For Japan, you have a lot of, activism from the state, with a lot of incentives for companies to do some buybacks and dividends and raise the shareholder awareness. For China, they plan to do the same thing. So for China, the Chinese government is expecting people to buy more stocks and lift the economy. I'm not convinced. For the moment, I'm not convinced. So what do I plan to do with China right now? Definitely not buy more and sell all my Chinese holdings. I mean, the only remaining one is Alibaba. I plan to sell it in the coming quarters. If you like this content, I have an investing coaching program. In this program, you will learn a complete investing process. You will learn how to find good stock ideas, how to properly value stocks, when to buy, when to sell, so that you can build a strong portfolio with great companies. Additionally, in this coaching program, you will have access to my personalized guidance for long-term results. We will do weekly calls where we analyze stocks together, and you will have access to my private number available 24/7 for full support. If you have any questions, I'm here to help. Click the first link in the description below to get more information. You will get a short video that explains how everything works completely for free. No need for your mail address. Just click the first link in the description and I'll see you on the other side.